Thursday. I almost said Friday because it's the last trading day, but it is actually Thursday, the last trading day of this week. Literally, thank you, Jesus. It's been a nuts week. It's been a good week. Don't get me wrong, but thankful for a little much needed rest at this point. It is basically 12 minutes remaining in the session, and we're going to walk through the charts with you so you can see what I'm seeing. I don't plan to do any trading the last 10 minutes unless I absolutely have to, but I don't foresee that having to happen. I just kind of want to walk you through price action so you can see what is happening. It would not surprise me to see a little bit of a sell-off at the close, but odder things have happened. So we're going to shift gears to the charts and go from there. So as you can see, here's the S&P 500. Again, here toward the end of February, here's your big dip. Not fun. Went down as low as 2191. Have rallied back. Here's the range where I'm like, if we can get out of this, we can rally a little bit more. And we did. Kind of surprised me, honestly. I'm still pretty conservatively invested here. Don't have a lot invested. So obviously in hindsight, I wish I would have had more invested. That's just being honest. I made a statement last week that at around 2,600, that do I expect 2,800 or 2,350? Again, 2,800 or 2,350 first. I did expect 2,350 first. That has not happened. We actually did test the 2,800. Again, this is all pretty typical price action in a bear market. Call it what you want. I'm not really going to get into terms, but we are at very, very key levels. Right now, this is actually very interesting. The 2778 level, which is where we're at right now, or 82, it updates every 10 seconds or 15 seconds. The 2792 is a very important level. That is a 50% retracement. I'm going to go to that chart real quick. If you're a Fibonacci believer, the 50% retracement, basically the same chart, shows the full dip. A 50% retracement is right near where we are right now. We're trading just below that. That's okay. But many believe, and I'm not saying this is me, but I'm just saying it's important to take all philosophies into consideration here. A lot of philosophies believe that if we trade above this, which we definitely have, I mean, we got up to 28.18 today. I mean, it's been a huge rally. We have basically, of the 34% decline, we recouped half of that in a very quick time frame. Don't get me wrong, it was a very quick downturn, then uptrend. It did surprise me that we did get out of this range that quickly. It also does concern me a little bit. But again, the faster you go down, the faster you can go up. Now I want to see what happens. With bank earnings coming up, it does concern me a little bit, which is why I'm conservatively invested. Blatantly telling you how it is. I missed this call. I wish I would have had more invested this time, but it would not surprise me to see us retest a lot of these levels down here again. It's not being pessimistic. It's just I would love to see that. This week I even put this in writing. I wanted to see a test of 2650. We did. I wish I would have added there, but just did not have the conviction at the time. So missed out a little bit there, just being honest with you. I don't win them all, but a lot of times being conservative does pay off. In this case, it did not, but I still think I'm going to be able to see all these values below again. It's not being pessimistic. I just, previous times this has happened, usually you want to see a retest, and it could be that we get back into this range for a while. That would not be bad price action, to be honest with you. But truthfully, price action has been pretty strong. I mean, you're seeing it right here. It's holding key levels right now with basically a couple minutes left in the trading day. I'm going to update this. It's actually holding up much better than I think people would expect, which is why I always keep some in, because if I'm wrong, I don't want to miss out on all the rally. So we've underperformed this week, but I'm not concerned about it in the next few weeks. I think we are in a phase where there was some optimism with the curve finally flattening, which I'm very thankful for as well. Now I think the next shift goes to the economics and, how does the economy actually perform when we're shut down for basically 2 to 3 months? That does concern me. I'm just being honest with you. Had we been at the economic phase here, I would have bought, but we're at the economic phase after, a 26% rally. And that makes me believe with bank earnings coming up, I'm a little concerned. You always keep some invested, but I'm just being honest that I would not surprise me to retest some of these levels. 26.50 is a big one. So again, to the upside, it could very well happen 28.20 and 28.85. It does concern me up there. But we are getting closer to the 50-day moving average. We showed you the 50% retracement, which is all very good price action. Technicals are actually holding up pretty strong here. Again, we're actually not going down into close. A lot can happen in the last few minutes, but I'm keeping you on this page for a reason. Interesting stuff here. This is showing you the sectors on a Friday afternoon that are performing the best. It was interesting that the conservative areas, more defensive names, have actually done better. Lagging is technology and energy. Energy doesn't surprise me, though. It's very interesting. We got a production cut, and oil has just gotten killed, which usually does not make any sense. The market doesn't have to make sense. But usually when you get production cuts, that's better for oil companies, but the price of oil has gone down even as a result. It popped originally, I believe crude was up 11% at one point today, and now is down negative significantly. So very interesting stuff going on. Again, 5 minutes left. Holding okay levels. It might get to the 27.92, which is the 50% retracement. Leave investors over the weekend puzzled as to which direction to head. But overall, price action has been okay here. Gold. We've been talking about this. I have not pulled the trigger. I wish I would have. But we basically said, hey, tested lower. Everything sold off here. Rebounded higher. Showed some good consolidation. And has rallied significantly. So don't hate this move at all. Holding very good RSI levels, relative strength index. Very good. We like to see that. The NASDAQ 100 is at key levels, period. Would like to see it hold and get to the 205 area, which is the 50-day moving average. But overall, the NASDAQ, as I saw on the previous page, the NASDAQ or technology has actually lagged a little bit the last few days. I'm not really too concerned about it because you're seeing a lot of the places that just got killed, like financials, airlines, cruise lines, and oil get a little bit of a rebound. Oil recently got killed, but a lot of those bottom feeders did go up, which definitely played into a big portion of this rally. So just be careful out there is what I'll leave you with. Small caps have outperformed, testing a very, very key level here, right at the 25 and the 125 on the IWM, which is an ETF for the Russell 2000. So a lot of areas and individual stocks at very key levels. Got to be very careful here. TLT is holding up okay. It again, previous week said sell the crap out of it here. It did go into a plummet. Again, this is where everything went down, the market, everything. So it's interesting how people say, buy these areas when the market, they did originally, and then it got killed. Everybody just sold everything. It's holding up pretty well here. So we're just showing you key levels, giving you both sides of the story. Price action, I want to go to the close because we got 3 minutes left. This will be, you see what I go through on a day-to-day basis. The last 3 minutes holding up pretty well here at 27.90, which is right at the key level. I think people are going to be very surprised going into this weekend with this level holding. A lot can happen in the last 2 minutes, but it is holding key levels. We're going to stick with you and continue to kind of discuss our mindset here. So originally we backed off significantly right here. Right around 2600, this gap. Again, we do believe that gaps don't have to be tested, but it usually leads to more strength when they are tested. So keep that in mind, that this range would not be a surprise to see a retest. This would not be a surprise to see a retest. Not really moving too much here, which is very interesting. I'm going to make sure this is updating. Might get a little fear into the close, but overall, not bad at all. It's right at the 50% retracement level, which is gonna leave people puzzled into the weekend, which is why I didn't make a ton of change. Right here's the 50% retracement. I do also wonder how many people are actually trading at the end. I'm heading into a long weekend. But we are holding up pretty well, which is encouraging. So again, take your opinions off. I am concerned about the economics, and I think I have a reason to be, but we're going to play this a little more conservative after, a 26% rally off the bottom. Usually retests do happen. So hang in there. We are close to the 4% of the 4 o'clock time frame. Overall, not seeing a lot of selling into the close. So that actually is pretty impressive. 4 o'clock. Let's see if this updates any. 4 o'clock. I want to see 4 o'clock. And there's your close. So this is going to leave people overthinking it, and there could be a lot of bullish and a lot of bearish moves here right at the key level. Look at that, 27.89. It's hilarious. I mean, that's just, it is what it is. That's how technical this market is. It's gonna concern people going into earnings. Maybe banks do a little better than expected and we rally to the next level, but just be really careful here. We are, again, just being honest with you, I wish we had a little more invested when at the 26.50 level, but we're okay here. We will have opportunity. It's not wise to chase this, I don't think, but there will come a point where many will. And so does it go a little bit higher to an unknown level where retail investors will buy and probably get hit pretty hard? I hate to say it, but again, we love the price action. It does surprise me. I'm just being honest with you, but the market doesn't care. The market, that's why it's so important to watch price action and ignore the news, because again, jobless claims are horrible. The market believed at that point it did not matter because the price was so low. So hang in there. It was a frustrating week, but we will get through this. I'm going to regroup. And don't get me wrong, accounts were all positive this week, but I wish it would have been a little bit more. Wish it would have done a little bit better this time. So hang in there. Let me know if you have questions. Get some rest. Feed your brain, meaning don't just watch TV all the time. Get outside. Do things to revive yourself. Been fortunate to have a little bit of sun the last few days. So hang in there. Not bad price action. We'll take it. Thanks, guys. See ya.